G'day everyone, welcome back to Pete's Investing. Today is May 27, 2023. This is the Nat Gas price update. We've got here a neutral positioning on our weekly trend chart. We've got a neutral also on the daily, even though it was in a bullish signal for a number of days. And on our hourly chart as well, I'll give you an update on the divergence and also on the daily divergence, which is still playing out. First up on the weekly chart, what we do is look at the overall trend, and you can see here during this whole period, since this decline, we were in primarily a bearish momentum, and currently we're with a few neutral positions, and it's still neutral on the weekly. And what that indicator shows is a combination of the triple moving average of the price chart, moving average 3, 5, and 60, married with the moving average 5 and 50 of the CCI 150. When they align, it shows a bearish or a bullish signal or a neutral signal, and at the moment they're not aligned, so it's showing neutral. So just be careful about taking trades at the moment on natural gas. On a daily, the same indicator shows neutral as well, even though it was showing a slight bullish on the last few days there. But just be mindful, I prefer to trade when the weekly and a daily are aligned. So I would not have gone long there. I would have gone primarily short back during this period. So again, just looking at the daily more closely, we did draw these support resistance line, support at 2064 and resistance at 3050, and if I zoom in, there was a minor resistance there at 2556, and it broke through that and bounced back down to the downside. Now we did have this divergence that was working out and still working out actually on the daily, but what I'm going to do is, you can see here the divergence is still playing out. I'm going to move that to that point there, and that also requires us to move that divergence, that bearish divergence, to that point as well. So in that range, the same range basically. So what it's still doing, it's the price chart is showing a bearish divergence with a bullish divergence on the CCI, and these don't always work out, but when they do, they work out nicely. And that target range I'm going to keep there. So the way it would work is, once that breaks above this, if this divergence continues to the upside and the price continues to the upside, then we consider that a continuation and working out in our favor, in which case the initial target will be this range, which happens to be the 23 to the 38% retracement of this previous Fibonacci range. So we're going to keep that in there as a potential. So that's why there's a bit of a uncertainty in our indicator down here in terms of going long or short, and that aligns with the weekly as well. So it's uncertain at the moment. So this is purely a potential, even a minor retrace, or even a potential long term. So we can't predict it's going to be long term. It could just be a retrace. On the hourly, there was a different divergence. Just another thing with these divergence, the hourly at the different time frames are independent divergence. So we're not suggesting we trade in this way as well. This is a different divergence to the daily. So this is all independent to the daily. What it's showing here is a bearish divergence versus a bullish divergence on the price chart, and that has actually worked out okay, because you can see there the price did break down. The CCI continued to the downside, and the price eventually broke down through this channel which we drew earlier. And our initial target area was would have placed it between the 50% and a 61%, which it actually broke down towards. So it's actually done that. Now in this case, it looks like it's breaking lower. So we initially take the initial Fibonacci retracement level. But again, I'm not suggesting you trade these. I'm just showing you these are potential areas where we might see a bit of a retracement, short or long term. At the moment, it's moving on to a medium term retracement to the downside in line with the CCI. What we've got up here as well is, if I zoom out, we've got a back test which goes back to the period where we're going long only. We could apply the same logic in reverse to go short, but again, these are all independent individual entries and exits of the trade. And here we've had a bit of a drawdown effect. Likewise here, there was a bit of a drawdown as well. And the way to trade this is using the CCI and the moving averages strategy and a fractal breakout. So if I zoom in closely, you can see here, we're both weekly and daily. If they are aligned, we take a fractal breakout when when a candle breaks above the fractal. And if we're going short, of course, we look at the opposite effect when the candle breaks below the fractal. But as I said, we only go, if I zoom out on that one, in this case we're going long only in this back test, and you would have avoided going long during that period and that period, because there were no long. See, that was during August 2022 and in April 2023. So in August, back here, there were no long trades during the weekly and only a couple of long trades during the daily. So you would have avoided, and that's why I prefer to trade when the weekly and the daily are aligned. So you would have avoided taking those long trades based on the weekly primarily and the daily not being in your favor. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching and see you in a future video.